Right, welcome grade 8s. So today we are going to be looking at, I hope you've marked your solutions. So here is one of the videos which is going to explain how task 4.10.1 is done. The other tasks, they've been explained in the solution for task 4.8.1. So those ones you can do them. So here, I just want to explain this because this particular question was asking you to provide to complete this particular exercise in your workbooks of where the transaction should be recorded and the effects those transactions have on the accounting equation. So I hope you were able to answer it because these are the things which we did before. So you may have an idea. So you should be able, you were supposed to be able to have completed this exercise, but all the same, here is a solution to it. Okay. So the first transaction is that one where you are asked, right? First transaction, they say on May 1, owner, Mr. Justino, deposited 50,000 rand capital, right? And he got a receipt 1. So you see that here, we put the date, and then since it's received, it's going to be under the CRJ. And then the amount received will be 50,000. And what effect does it have? So it increases owner's equity and it increases the asset, which is the money in the bank. Transaction number 2, May 2, borrowed 80,000 from NBS. Amount was deposited directly into the bank. So this amount, if you borrowed, we receive money, it's going to be in the CRJ, right? An amount of 80,000. And what effect does it have? It increases our assets because we get money into the bank, and then it increases liabilities, what we owe other people. So it increases assets and it increases liability because we borrowed. Next transaction, on May 4, bought a second-hand delivery vehicle from McCars for 60,000 rand, paid this amount by check. So what this does is that what actually happens is that it does not have any effect on the accounting equation because we just exchange one asset for another. So we subtract money in the bank and we get another asset. So it's a plus or minus on the assets, right? So it's just exchange, does not have any effect at all. And then on the May 5, cash takings to date amounting to 7,400. So here it's cash receipt, right? So it's a cash receipt. So the previous transaction, it was a cash payment. So this one was the cash receipt. There we go. So you have received money, which means it increases owner's equity and it increases assets. Right. Next transaction on May 7, cashed a check for 10,000 rand to pay 4 employees their wages. So the 4 employees earn the same wage. So it's going to be money, it's paid, money out. So it's a cash payment journal and it decreases asset and it decreases owner's equity. So you can see expenses reduce our net worth, right? But we cannot do without them, right? And then on May 10, sent a check to Aqua and Company for 31,780 rands, right? So this was in respect of equipment for 29,000 and consumables. So the first transaction we are going to record is that from Aqua. So it's a CPJ. So we are buying equipment. Again, it's just a plus or minus on the assets. We subtract money from the bank and we gain equipment worth the same amount. Does not have an effect on the net worth. And then the next transaction is the CPJ, where we pay consumables, right? So consumables, these are operational expenses. So what they do, they reduce our net worth. So it reduces asset and it reduces owner's equity. Moving on May 11, cash takings to date, 8,500. So here it's a cash receipt journal entry and it increases our asset and it increases owner's equity. And then May 14, cashed a check to pay the wages of the employees. So it's an expense, there's a payment, cash payments journal, it reduces asset and reduces owner's equity. And then on May 15, Mr. Justino used a business check to have his wife's car fixed by McCars. So that one is an expense which will CPJ we pay, right? And it reduces owner's equity and it reduces assets. And then paid the telephone account via internet to Telcom. It's a cash payment journal entry and reduces owner's equity and reduces assets. And then the water and electricity amounted to 1,100, paid this amount to treasury via internet. Again, cash payment journal entry reduces assets and reduces owner's equity. And then next transaction on May 20, cash takings to date amounting to 19,400, right? And then also you see on that same date, right, on the 10th, or the 20th, you see also that we bought, right, 21,782 worth of equipment, that is plus stationery, right? So stationery of 778, right? Moving on. On May 21, paid the wages by check, right? So we enter that transaction, 12,500. And we are told that there is another employee who has been employed, so it goes down up to 12,500. It goes up by 2,500. Remember, we have been paying our wages at an amount of 10,000, and there were 4 employees, and they all earned the same amount, which means each employee earned 2,500. So now, if there are 5 of them, so the amount goes up. They now earn we now pay a total wage bill of 12,500. May 23, purchased equipment from Aqua and Company for 490, paid by check. So there we go. And then May 25, right, cash takings, cash receipts journal, increase assets, increase owner's equity. And then also there are those charges. So we add those up and we just call them bank charges. We make the entry. And then on the May 26, issued a check for 1,220 to pay Bulelo CC, right, for repairs. Paid the monthly insurance premium to Co. So we've got 2 transactions here, both cash payment journal. The first one there for Bulelo, and then the second one, or both CPJ, reducing assets and reducing owner's equity. And then on May 27, paid for wrapping materials, consumable stores, bought from Aqua and Company with a check for 2,450. There we go. Cash payments journal, reducing assets, reducing owner's equity. And then May 28, paid the wages by check, right? There we go. Reducing owner's equity, reducing assets, and also it's a CPJ entry. Then on the 29th, acquired additional equipment from Aqua and Company for 19,820, issued a check. So basically, we have acquired an asset and we reduce our amount in the bank. So it's a plus and minus on the assets, no effect really on the accounting equation, right? And or on the net worth. And then it's a cash payment journal entry. And then on the 30th, May 30, cash takings to date amounting to 25,110. So that one is a cash receipt journal entry. It increases assets and increases owner's equity. Next one, it's a CP, the tenant paid, okay, that's a cash receipt journal amounting to 1,500, increasing owner's equity, increasing assets. And then the last transaction on May 31 made an internet transfer to NBS amounting to 2,150. So you make that entry, right, which is 2,000 was in repayment of the loan. CPJ entry reduces liability and reduces assets. And then the next transaction, 150, it's interest paid on the loan, which is CPJ entry, reduces assets and reduces owner's equity. I hope you are able to understand what has happened here, the effects of transactions on the accounting equation. So now you were, after doing this, you were supposed to be able to now do the cash receipt journal entries and the cash payment journal entries, and then you will be done. So please, be prepared. On Friday, we are going to do a formal task for marks. Okay. Enjoy the rest of your day.